Hello and welcome to Imperial Wealth. My name's Nat, and in this short video we're going to be having a look at some beginner's technical analysis. In particular, we're looking at moving averages as it applies to cryptocurrencies, but these techniques can be used for technical analysis on any markets. If you want to learn how to use the moving averages indicator on both centralized exchanges and on TradingView, stick around and we'll show you right now. So if you've seen our previous video on beginner's technical analysis, you'll know that the best tool that we recommend to use and is commonly accepted in the cryptocurrency space as the best charting tool is TradingView. This is what TradingView looks like. This is the TradingView app that I've downloaded for my Mac. You can download an app for the PC, or you can use TradingView in your browser. TradingView has a free version and it has some limits to it, but it is perfectly fine for beginners who want to do some technical analysis. And there is also a paid version. We'll leave a link below if you don't already have TradingView. So one thing that a lot of people might not realize is that the charting tools on most of the centralized exchanges look very similar to TradingView. That's because they use a third-party integration of the TradingView software. So here I am on FTX. And you'll notice that this looks very similar to TradingView. That's because it basically is. It's a more basic, cut down version of TradingView. That's why we just suggest using TradingView, because it has a lot more features than the exchanges. But what I'm going to show you about the moving averages can be done on any exchange like FTX or also Binance. You'll see that they have the TradingView integration there. First of all, let's just look at TradingView itself. So I'm going to go full screen in TradingView. So the moving average is a pretty simple indicator. It's just the average of the price of a cryptocurrency over time, and it's displayed as a line. And you can access the moving average by going up to indicators right here. When you click on indicators, you're going to search for moving average. And you should find pretty quickly the moving average. Because I have a star next to it, that means that I have favorited this, but if I didn't have it, it would just simply look like this, moving average. You can put a tick in the star to favorite a indicator so that when you open this indicators tab, it'll simply be right here. So I'm going to click on that. You'll notice now that right here, we have some extra text and some icons. This has loaded up with the default moving average of 9 days. So that is the average of the price over 9 days. And you'll see there that there is this blue line that now follows the price action fairly closely. So first of all, I'm going to add in some custom moving averages. And these are going to be some longer time frame. So to do that, we hover over this text and we see there is a little settings wheel here. Let's click on settings and let's first do a 200-day moving average. And we're going to use a simple moving average, SMA, which is the default. And I'm going to click OK. Actually, for the 200-day moving average, I'm going to change the color. So I'm going to click that little settings wheel again, and under style, I'm going to select a gold color. And I'll tell you why I've selected gold in just a moment. Let's add in another moving average, and we're going to see if we can find something called a golden cross, which is a long-term indicator for market sentiment in the crypto space. So I'm going to click on indicators again. Because I've done a favorite on moving average, I'm simply going to click that again. I can actually click that as many times as I want and it will add new instances of the moving average. If you want to get rid of one of your moving averages, you can hit the X right here, that'll remove it. If you want to simply hide it for the meantime, you can click the little eye icon and it will show and hide that moving average. So I'm going to hide that third one, and for the second one, I'm going to hit the settings wheel and I'm going to select a 50-day moving average. So under length, I'm going to select 50. And for the style, I'm going to keep that as blue. So now I'm going to hit OK. And we've now got a 200-day moving average and a 50-day moving average. So I should have mentioned before, this is actually the Bitcoin chart. And this is the Bitcoin against the US dollar, or against Tether, which is tethered to the US dollar. So we can see now that we're on a large time frame on this chart, because up here I've got the 1 day selected. If you don't know how to switch between time frames, simply click on that. You can go all the way down to 1 second if you like, but usually you don't need to go below the 5 or even 15-minute chart. So I can switch to the hourly, and you'll see that those moving averages, now that we're on the hourly, I have to zoom in a bit more. Those moving averages act a little bit differently because they are the average of the price on the hourly chart. So this integer here, the 50, ties in now with an hour, so it's an average of the 50 most recent 1 hour candles. So I'm going to switch back to the day, because on the daily chart, there's a good long-term sentiment indicator called a golden cross. And we're going to see if we can find one and then see what happened after it. This is simply where the 200-day moving average crosses the 50-day moving average. And the opposite is called a death cross. So basically, when the 200-day moves above the 50-day, I can see one right here. Let's zoom in a little bit closer. This is usually a very bearish long-term symbol. Now you need to know that indicators are exactly that. They are just an indicator. There is no perfect indicator, and professionals who do technical analysis day in and day out use a number of different indicators, as well as fundamental analysis and overall market direction. They use many pieces of different data points to forecast what they think will be happening in the markets. And then even with professional long-term traders, they usually only right 50 to 60% of the time, except that the way they do their trades is that when they win a lot more than they lose. And when they lose, the losses are usually quite small because they're using a stop loss. So do take these indicators with a grain of salt. They can be very handy though, when we go back and look what happens after a golden and a death cross. So let's go back right to the start of the massive bull run that happened in 2020 and 2021 on Bitcoin. Let's see if we can find the point where the 200-day moving average crossed below the 50-day, which is known as a golden cross. And I can see right here, let's zoom in. It happened when the price was around about 8,000 US dollars. We can see right here that the gold line crosses the blue line. And we can see that after that, in this instance, the indicator worked spectacularly well, because if I zoom right out again, you can see that we didn't have another cross for almost a year. And the price went from 8,000 all the way up to roughly 65,000 US dollars. That's about an 800 or 900% return on investment after that cross happened. And then we can see after the market topped out and we had a major correction, there about halfway through that correction, we had a death cross. And then very quickly after that death cross, we had a period of time where the price traded lower highs and lower lows. But you can see in this instance, an indicator like the golden cross and the death cross is not always super accurate, because it wasn't all that long until the market was flipped bullish again, and we had another golden cross here on the daily, and then that led to the run up to the all-time high over the next few months. We can see here that the last time there was a cross was a death cross that occurred in January of 2022. And here we are almost a year later, and we've had a year of bear market after that cross, and we have not had another death or golden cross. So a lot of people in the crypto space who know about the moving averages will be looking at this very carefully, because you can see the direction that this is now heading. It's looking like these two may possibly cross at some point here. Although you can see when they were heading in that direction right here, it then very quickly moved in the opposite direction. So I often see people on Twitter getting very excited when there is a golden cross, saying it's a good long-term bullish way of checking the market sentiment. Some other averages that I like to use, if I go to this third one here and hit the settings, is I like to use a 20-day moving average for some more short-term trading. And if you change the simple moving average, the SMA, to an EMA, we will get an exponential moving average. So I've just quickly added a fourth one here, and I'm going to make this a 13-day moving average. And I'm going to make sure that they are all different colors. So I'm going to select red for this one. I'm going to get rid of the 200-day, and I'm just going to have these lower time frame exponential moving averages. There is a small difference between the simple moving average and the exponential moving average. The algorithm that figures out the exponential moving average tends to hug the price action a little bit more closely. So that can be handy for some shorter term trading. Let's switch down to the 1 hour chart and let's find a bullish scenario and see what information we could have possibly drawn from some of these moving averages. So here's a little bit of good bullish price action on the lead up towards the end of the bull market, going up to the all-time high at the end of 2021. Let's zoom in a bit closely and let's have a look at how the price reacts to these moving averages, because they can sometimes be a good way to enter a trade if you're doing some simple moving average trading. You'll see in a time of bullish price action, these candles, these are the 1 hour candles, they tend to, more often than not, bounce off of these moving averages. Sometimes they trade below temporarily, but in general, in bullish price action, the candles remain above the 20 and 13-day moving averages. You can see that if I were to be doing some trading on these few days, once there had been a big run up like that's gone way above the moving average, say here, this may not be a good time to enter a trade. I might wait until the price is trading at or below the current moving average and see this as a better time to enter the trade. You can see that we had some very bullish action here. It went way outside that and it tends to snap back to this average like a rubber band that's been stretched out. And you'll see that then we traded below slightly, but it tends to continuously pop up above that moving average all the way up. So it can provide some really good entry points into trades if you're trading on some shorter time frames. Day traders or professional traders will have things like the moving averages. They'll have some trend lines drawn in. They'll have support and resistance. They'll be watching things like the volume. They'll have MACD, they'll have RSI, so they're taking multiple points of data to make their decisions. So much in the same way, if you don't have TradingView or you just want to be able to do this on, say, FTX or Binance or even KuCoin or one of the centralized exchanges you're using, it's really easy to add these in on the more simplified version of TradingView. So under the cut down version of TradingView that you get through FTX, we can simply go, you can see there is like an indicators just like we saw in the FTX software, and we will search for moving average. And it should give us all the ones that are available. I'm just going to use the simple moving average. And then you can see here now that it looks slightly different, but it works in the same way. We've got a little settings wheel right here. We can select the color by going to style. So if I want to do that golden 200-day moving average, I can then go to inputs and I can select 200 under the length. Here's my second moving average. I'm going to hit these settings right here and make that my 50-day blue line, just like we did in TradingView. And then select OK. Beautiful. So now on our charts, we can save these if we like when we're signed into our account. So we can save charts and we can bring them back later. So if we've added some indicators and we've drawn some trend lines and things like that, we can keep them for later, just like you would in TradingView. So I hope you found this little primer on moving averages helpful. If you did, make sure you do subscribe to our YouTube channel and make sure you do check out our weekly podcast where we talk about crypto mining, technical analysis, macroeconomics, and all sorts of other interesting topics. That's available through our YouTube channel. Thanks for watching, and we'll see you in the next video.